welcome to Business Incorporated, your daily window for markets, global news, and all the things in between. I'm Will Ibong. Welcome to the show. Here's what we're tracking today. Ghana's economy expands in the second quarter of this year. And Kenya bank lending hits yearly high after rate cuts. And South Africa's president urges exporters to look beyond the U.S. amid rising tariff threats. Great to have you join us this afternoon. I'm Will Ibong. Let's check in first on the commodities market. We start with the oil space. Oil prices, we see it climbing up today just right after, that Israel struck Hamas and, see leaders in Poland downing drones, and U.S. pushed new sanctions on Russian oil buyers. Now let's look at the price. We see it's up today 0.89% to $66.98 per barrel. WTI also up 0.93% to $63.21 a barrel. Now Brent gained, we see that jump 2% after that Israel attack, and it also retreated after that. But let's look at the metal space right now and see how that performed. You see metals after holding near the record highs on Wednesday, lifted by hope of U.S. rate cuts, ahead of in key inflation data coming in. Spot gold rose more than 0.5% today. We see it at $3,643.78 per ounce. We see U.S. gold futures unchanged and holding steady there. Spot gold, platinum, and palladium also in the green. Let's move on to other news that we're tracking. We see in light of the U.S. tariffs, South Africa's President Cyril Ramaphosa has urged companies exporting to the U.S. to seek other markets. Ramaphosa appeared before the National Assembly to answer questions from the Parliament in Cape Town, and said a month ago, we could check back, we see Trump tariffs came into effect with South Africa hit with about 30% tariff, but Ramaphosa is saying he has sent officials to the U.S. for a trade proposal. Let's take a listen.
South Africa is responding to the imposition of these tariffs by the United States by intensifying its own engagement with the U.S. administration. We're working to stabilize diplomatic relations, and we are introducing a range of measures to make South African companies more resilient. We do believe that this is the best course we should take, and in a way it is double-pronged. We negotiate with the United States, but at the same time, we encourage our companies to use this as an opportunity to start seeking out other markets. And we do have leverage. And our leverage has to do with, yes, the natural resources that we have, the minerals that we have, which the United States needs. The discussions that we are having now with the United States also revolve around that. The critical minerals that South Africa has and the capacity that we have to process those minerals with the energy backing that we have, which many other countries don't have, is something that we take to the table and use as leverage. So I'd like to say that it is a strategy that we have opted for, and a strategy of engagement, and a strategy which we believe will yield results.
Also, Zimbabwe and Zambia today began the midterm review of their 18th Joint Permanent Commission on Cooperation, JPCC, in Harare. We see it co-chaired by the foreign affairs officials of both nations. Now, officials are assessing the progress on decisions from their March 2024 session and crafting strategies to deepen economic security, tourism, and agricultural ties. And the review reinforces the long-standing cooperation between the countries as they prepare for their 2026 Binational Commission in Lusaka. Let's move on to other stories now. Kenya's private sector bank lending rose 3.3% in July, marking the fastest growth in a year, up from a 3% contraction just 6 months earlier. The surge follows the Central Bank of Kenya cutting its benchmark lending rate by 3.5% since August 2024, including 7 successive cuts, with the rate now at 9.5%. The central bank governor, Toge, says the cuts are beginning to boost credit and stimulate economic activity, though banks have been slow to pass rate reductions to borrowers. And looking at Ghana's economy, we see it growing 6.3% year-on-year in the second quarter of 2025, outperforming expectations. And this figure comes directly from the country's statistics agency. In comparison, the first quarter saw a growth rate of 5.3%, showing a healthy upward economic trend. Now, the solid performance reflects strong activity in services and agriculture, with non-oil sectors gaining momentum, signaling a more balanced and resilient economy. Now let's check in on markets in Africa. We see tracking those exchanges. We see positive sentiments for African markets. We see Nigeria's exchange sustaining that positive momentum from Monday up at intraday today, 0.21%. 140 hitting 140,000. We're back there now. Hopefully we close at 140. And JSE in South Africa is also up 0.1%, still holding strongly to 103,000. Let's look at Egypt and see how the EGX performed at intraday. It was up more than 0.5%, 0.5%. 58% to be precise, 34,587 points. And Kenya closed Tuesday's session in the green, up 0.87%. That's basically what we have there. So let's look at the Gulf stocks and see how they performed at intraday. We see negative sentiments permeating those exchanges that we tracked. Dubai was down more than 0.5%, almost 0.6%. Abu Dhabi was also down 0.27%. Saudi and Qatari indexes also traded in negative territory. We see them down 0.236% and 0.27% each. Now let's look at what's happening in the U.S. We see S&P 500 futures rising 0.2% today in pre-market trading, while NASDAQ futures added a 0.1%, and we see the Dow Jones dropping there. That's basically what we have for those indexes. But we're getting news. Oracle shares jumped 30% after reporting a 1,529% surge in multi-cloud database revenue from Amazon, Google, and Microsoft. Oracle CEO Larry Ellison is now closing in on Elon Musk for the title of the world's richest person. Now let's get the highlights for Tuesday's market performance with our correspondent Maria Bird.
The U.S. stock market hit some record highs on Tuesday, as investors are watching to see if inflation has any impact on the U.S. economy. As the Dow Jones was up at 0.5%, having a record-setting day, and the S&P 500 was also up at 0.3%, while the heavy-tech Nasdaq was up at 0.4%. Many investors were watching to see the economic reports from the Labor and Bureau of Statistics as it relates to economic growth in the job market, as there are 911 fewer jobs than once was expected 12 months ago. This slowing in the job market could have an impact on the U.S. economy, but has not shown to have much of an impact on the U.S. stock market.
Thank you, Maria. Now on Tuesday, Apple launched its Apple 17 series. We've got new iPhones, Apple Watches, and AirPods, and they will hit store shelves and ship to homes starting September 19. But it appears the market and maybe some consumers are not too pleased. Joining us to give insights on this is Isaac Marshall, investor at TLG Capital. Good afternoon, Isaac. It's good to have you join us.
It's so good to be here. Thank you so much for having me on.
Okay, so Isaac, investors do not seem too pleased with this new Apple release. Why is that?
Yeah, I think, look, tariffs have been a big driver in U.S. volatility since the beginning of the year, right? And frankly, not just the U.S., I think around the world, like geopolitics is such a key factor. I think when you look at Apple specifically, obviously, the 25% threat that has come upon the company makes a big impact when you think about how much of the S&P has really been driven by these sort of top 5, top 7 market cap companies that dominate the S&P 500, right? So I think, there's a lot of concern about it. at the same time, when you really dive in, every time there have been these different trade debacles in the past, I think a resolution usually comes out. I think even if there's no resolution, when you look at the impact of the 25% tariff, you're really thinking about an impact on margins of 1 to 2% for Apple. Net income margin today is about like 24, 25, so it comes down to what, 22, 23. So I think more likely than take that hit, I think Apple probably finds a way to develop better manufacturing. I think, finds a way to create sufficient investment in the U.S. to offset the perception that there's a need to create a 25% tariff. I think the key thing is that Apple has to create the perception that the administration in the U.S. has won something and obtained a concession. And I think that's how what you'll see negotiate over the next 3, 6, 9 months.
Oh, so is that why we saw that nearly 1.5% drop in Apple shares just right after the launch?
Yeah, exactly. I think that's just the market digesting the reality of the tariff. I think the fact that it's only a 1.5% drop, I think reflects the fact that, folks aren't entirely sure how it's going to play out. I think there have been a lot of tariff discussions that started off very, very scary in their announcement. The market reacted strongly. Then the tone softened. And then, there was sort of this back and forth dance as the administration tries to, create an incentive for more and more companies to put more manufacturing into the U.S. I think to the extent that Apple does this, I think that there are other changes that have happened on the horizon. For example, the U.S. just changed the way that R&D and CapEx spending is treated from a tax perspective. So more and more R&D will be able to be set off immediately rather than amortized over time in your taxes. So I think, as much as I don't want to call it a wash, because I do think that if Apple fails to follow the dance correctly, I think that there could be repercussions. But, in the meeting at the White House, I think Tim Cook seemed pretty open and very constructive in engagement with the administration. So I think I think there's so many variables at play between the tariff input and how taxes will change the costs of U.S. manufacturing, and frankly, how recent technology and AI will improve the efficiency of some of these organizations. I think, that's why I don't think the market reacted that strongly, to be honest, to something as drastic as a 25% tariff announcement.
Very hopefully we see Apple rebound from that drop we saw yesterday, especially if it's going to consider local production in the U.S. and considering the cost of production in the U.S. Hopefully it breaks even. Thank you so much, Isaac Marshall, investor at TLJ Capital, for sharing your insights. So looking forward to more conversations.
Great chatting with you. Thank you so much.
Now let's look at Asian markets now. We see stocks climbed on Wednesday after hopes of a U.S. rate cut and mixed China inflation data. Japan's Nikkei hit a record before closing up at 0.87%. We see the Kospi in South Korea also gaining 1.67% to hit a record high. Now Hong Kong's Hang Seng Index, we see it up 1.01%. And let's look at mainland China and see how they perform. They also edged higher 0.13%, and the Nifty is also up 0.42%. Very green close for that market. But China's consumer prices, we see it falling 0.4% year on year, while producer inflation eased, and keeping investors focused on the upcoming U.S. inflation report. And let's check in now with the markets in Europe and see how they performed. If they were as green as Asia, we're joined by Lars Alter in Berlin. Lars, what's going on with trading? Are Europe markets reacting to the hopes of U.S. possible cutting rates, or are there other things that are driving positive sentiments in that region?
Well, Will, I would love to tell you about how the markets are moving here, but as a matter of fact, they are barely moving at all. Just a couple of seconds ago, when I looked at the DAX, it was pretty much flatlining. So the DAX in Frankfurt doing something it's been doing for the last month or so, desperately looking for guidance. And it seems like they have to wait at least another day, because the ECB meeting is tomorrow, with the general consensus being, of course, on the Central Bank of Europe leaving the interest rate unchanged until tomorrow, however, and until we hear from the ECB, there is just not much action to be expected, and we are actually seeing it in the last couple of hours of trading. Market is going on sideways, and it has literally been doing for weeks now.
But let's look at what's also happening in Europe. Maybe those are the things driving those sentiments. France has seen some unrest this week, and there's a new prime minister, in place today. What can you tell us about the situation in France?
Yeah, we'll have to take a few steps back to better understand the situation in France. Earlier this week, François Bayrou became not the first prime minister to lose the parliament's confidence and step down. He was, in fact, the fourth one over the past 2 years. And that, of course, tells us that this is not about who's in charge anymore, but that there is a larger problem there in France. And it's true, France has a very high level of debt, actually the highest level of debt of any of the EU member countries in absolute numbers, the third highest by percentage. And mind you, France is the EU's second biggest economy, so that is nothing we can just ignore here. Now, for decades, France has been running budget deficits. Last year, it stood at almost 6%. This year is going to be at least 5%, according to government economists. There's also demographic problems, of course, of too many old people retiring, not enough young people coming into the labor market. So France needs solutions. And a recent one came from now former Prime Minister Bayrou. He wanted to cut 2 holidays, meaning for French workers to have 2 fewer days off. Now, it's easy to see why people didn't like that, but there's obviously no getting around the fact that the French will have to sacrifice something to get out of their mess.
Speaking of sacrifices, what will they sacrifice? What next for France then? How will France solve the problem?
Yeah, well, what's next seems to be actually starting today as we speak. Major unrest, protests in all the cities here, and the French are pretty tough with protests. Of course, that alone does not solve the problem. President Emmanuel Macron reacted fast. He made his Secretary of Defense, Sébastien Lecornu, the new prime minister. So at least there is currently leadership and not a vacancy in the office of the prime minister. The alternative, however, would have been elections, and that is what Macron wanted to avoid. In the current political climate, new elections would likely have strengthened the right and the left while weakening the moderates. France is already in a pickle here with the far left and the far right blocking most progress in parliament. Macron has at least now said he might be open to a better cooperation with the socialist left. Now, that would be a constellation that the country had for many years in the past. Fact is, even with a new prime minister quickly put in place, there are no easy solutions, with parties often blocking each other strictly in parliament.
Definitely see how that plays out for France, that cooperation between the two wings there. But thank you so much, Lars Holter, for sharing your insight. Lars Holter is a Deutsche Welle correspondent. Thank you so much.
Thank you, Will. Thank you.
And let's see what's happening in the crypto space. And Laddie Williams comes up here to tell us what's happening. Laddie, is the market bullish or is the market dry? Because you talked about mid-range trading. I'm like, you had something to do with that.
A range trade.
Yes.
At this point.
You had something to do with that, Laddie.
It's not looking so bad. $113,000, 0.47%.
Oh, well.
Not so bad.
Let's hope I don't want to say. Let's hope we stay there.
We'll definitely see. Because Ethereum, that's held on to that $4,000 level for a while now. 4,374, up 0.56%. BNB is also up a big 1%. Solana, a big 2.93%. Staying above that $201 level, 223. That's what we have for Solana right there. Let's look at some headlines in the crypto market now. Shiba Inu hit a 15-day high. That's a popular meme coin. Shiba Inu surged to a 15-day high yesterday, sparking renewed activity among long-term holders. On-chain data shows that a key metric tracking the movement of this investor cohort spiked to a 3-month high, signaling that seasoned investors are likely, moving coins to cash on the recent rally. Now, we're also seeing a Dogecoin ETF that's going to hit the U.S. Very soon. The first of its kind Dogecoin exchange-traded fund that's set to hit U.S. markets tomorrow, with Bloomberg's Eric Balkunas flagging the Rex Osprey Doge ETF as the launch vehicle. The fund is expected to list using the Investment Company Act of 1940 framework that Rex Osprey previously used for its Sol Plus staking ETF. So we're seeing all those ETFs now rolling in. Then MetaPlanet becomes Asia's largest Bitcoin holder. Yeah, we've seen headlines previously. Metaplanet buys 100 Bitcoins, 144 Bitcoins. So that's taking them to the highest level there when it comes to Bitcoin holders that's companies holding Bitcoin in Asia now. All right, let's get a check on what's playing out now. We have Gilbert Jopata now. He's a lead Smart Investor Lodge. Hello, Gilbert. Great to have you.
Yeah, greetings, Mr. Ladi. Good afternoon.
Right, so we have a producer price index. I believe that's coming out today. That's for the US. CPI data tomorrow. Possible rate cut next week. But Bitcoin is not in hyperbull mode. What do you think is playing out?
Okay, so while we're expecting the PPI number today, which will set the stage for tomorrow's CPI data, and of course, yes, the market have already priced in over a 95% chance that we're going to have a rate cut by Wednesday next week. But the thing is that uncertainty remains. Like a cut on Wednesday does not equal a cure. So at this point, only retail investors are celebrating the potentials of a rate cut, which we're also anticipating we should have 2 to 3 rate cuts, this year. One could be this month. We could have another October and then December. But right now, there are 2 possibilities that we have higher chances of 2 rate cuts, which is one this month and also by December. But then only retail investors are celebrating the possibility of this cut without paranoia, because investors are cautious before committing capital, because they know that even though rate cuts are always bullish, but a quick fix does not equal a cure at this point. On Saturday, there was this data by CryptoQuant that says that we have had the largest whale sell-off since 2022. So right now, some institutional investors are running into yield for safety, before they understand what is until they have a clear picture of what is happening in the economy before they could commit more capital into the market. But then I still think that while the market is trying to test some downside, the rate cuts that we should have, at this month and probably 1 or 2 more before this year ends, they are quite bullish anyway, but we may still test this new support level before we will have some upward continuation for Bitcoin and also other major crypto assets.
All right, so let's try and imagine now we get the first rate cuts in the US, next week. Do you see a sell the news event or a big rally for Bitcoin?
Okay, when we had with a large level of certainty that we are going to have a rate cut after the Jackson Hole summit by Jerome Powell, the market had some bullishness, but it was on the micro time frame. What happened at this point is that investors started taking profit. It was a sell the news. Don't forget, there are many persons, especially institutional investors, that started buying since 16, 17K to also 24K. And they have made over, like if you look at the surge that Bitcoin has made, some of them are seated at about 600% profit. And institutional investors always socially engineer a sell-off. So they understand that many persons are looking at the possibilities of rate cuts, and this is a good opportunity for them to start selling because they have to social engineer their sell-off. So even if we have a rate cut, it depends on a lot of things that could happen in the market. I still think that this rate cut, some institutional investors who are selling will still use this as an opportunity, to socially engineer, taking out their profit in the market. However, I still think that when there is more clarity of maybe the fact that after this rate cut, we may have 2 more, there will still be some capital that will be committed into the market because these institutional investors at the moment hate uncertainty. So this uncertainty is making early investors, they are leaving the market, while those who still have money to commit into the market are on the sidelines waiting for certainties before they could recommit capital into the market.
Right, and we know there are some traders that like to bet on price direction. What are you seeing this week? Are the shorts going to have it for Bitcoin, or are you seeing the longs making profit?
Well, when we look at macroeconomics, the rate cut is quite positive. And the fact that we had job numbers, how it is, and then we anticipate that inflation should be at a level that increases the chances that we are going to have a rate cut. That is positive when we are looking at macroeconomic scene. However, when I look at technically and the chart, the chart always tells a story. There are 2 things Bitcoin is showing us. Either at the local support level, we are going to hold, bounce off and start an upward continuation, or we still have possibility to test a new support level. So technically, when we're looking at have we capitulated, I think regardless, the market is bracing up for continuation, but still with a large possibility that we are going to test a downside before we continue the move. You know, which in my view, I still think that we may still see a 145 to 150 KBTC this bull run before the winter begins.
Right, quite an optimistic price level there. But thank you so much, Gilbert Jokwata, team lead, Smart Investor Lodge. Thank you for coming on today.
Yeah, thanks for having me.
All righty then. So, Will, that's it.
I can see that from projection.
Projection.
Yes, projection. And I was wondering, like, why doesn't it just stay low for those that just want to come in? You know, Bitcoin. Yeah, Laddie, think about those ones, people that just want to make entry into the market.
It almost makes me feel like saying low prices, wait for no man.
Definitely. But that's how we wrap up this edition of Business Incorporated. Thanks for watching. I am Will Ibong, and I'll see you next week.